At the end of February this year, NMG issued a cautionary statement indicating it was intent upon going for an equity repurchase program, popularly known as a share buyback. On the 28th of June, this exercise kicked off. The exercise closed on the 24th of September, which was Friday last week, with the performance rate of 82.5%, having realized 17.1 million shares against a targeted 20 million shares. We are now privileged to have the Chief Executive Officer, Mr. Stephen Gitagama, to join us and help us shed more light on this. Welcome on set.
Thank you.
Let's just begin by your sense in terms of how the performance finally was, because NMG went into this exercise on a price discovery mission. And if you look at the uplift ever since, my computation tells me it's about 89% up. Would you say it was a success?
I think this was a good success. The performance was actually exceeded our expectations, because at the time we started the share buyback program, the share was trading around 13 shillings and 40 cents. When we started thinking about the share buyback program, the share was trading at around 9 shillings. That was back in August, September last year. So I think the market reaction and the market levels of trading and the volumes of shares that we finally were able to purchase, 82.5%, is a significant success according to us. Okay. Yeah.
And if you disaggregate the participation through the buyback in terms of the trading of shares, I noticed that ever since NMG released the half-year numbers sometime in late August, there was less of participation in the buyback program compared to prior. And I think this really speaks to the quality of earnings that the company put out. But in your assessment, what did you make of this?
Well, I think before we released our results, we had several discussions internally. When is the right time to release these results? But the law requires us to release the results by the end of August. Now, the behavior of the market after the release of the results indicates that there is sort of a second thinking, a second thought among the investors that I think I should keep this share. It might fetch a better price. And we saw that by the share started trading by over the share buyback price immediately after the results were released. The other thing which happened is there are several days when we were not able to purchase any shares. There were actually shares in the market, but the shares were bought by other investors who thought the share buyback price at 25 shillings was still slightly low. That means they were ready to offer a better price. So it's a sign that the market is really getting more confident with the future of the company, and a sign that the value of 25 shillings per share might still be slightly undervalued. They might be, in my own view, my own assessment is this price might go up based on the behavior of the market during this period. And I mean, it's only the market that will tell what will happen.
Okay. Slightly discounted even at 25, interesting take. Let's take a step back and walk us through because this market, to be honest, is still at the point where it's trying to make sense of an equity repurchase program. Walk us through the end-to-end, the point where as a man steering this entity, you figured out maybe a buyback may be the way out in terms of price discovery here, to the very end now, having wrapped up the process.
Now, the industry we are in, the media industry, has been going through significant changes. There's been significant move towards digital business. And then there was a COVID, which happened last year. So around August, September, we realized that our market capitalization was significantly lower than the cash value. It meant that the value of the firm had been significantly undervalued. So we asked ourselves, what's the cause of this? And there are various reasons which actually can be attributed to this, but most of it is market perceptions, understanding of our market, understanding of our business, understanding of the future. And therefore we decided that maybe it would be a good opportunity to give shareholders an option to have some value out of their investment. So the share buyback option was considered as one of them. The other thing is during the COVID season, the COVID period, in 2020, we were not able to distribute any dividends to the shareholders. So there are some shareholders who needed some value out of their investment, and in the process, we thought that we better give them value through the share buyback program, but the value that was in the market was significantly undervalued. So we opted for the buyback, and I remember in February when we issued a cautionary statement, the share immediately rose to 25. So, and then that indicated to us, I think 25 might be the real fair or acceptable price. So then we settled on that, and I think the rest is history.
My computation is that NMG could well have spent about $500 million shillings in this exercise, and why that consideration is important is because as an investor, I'd like to know how does this expenditure leave the liquidity position of the company?
Well, we spent close to around 430 million for the repurchase of those shares. Now, in terms of the liquidity, it didn't have an impact. I think the cash position still remains very strong, and I think our pride is in the value that this has created to the shareholders. The remaining shareholders have their investment at a good price, and those who cashed in their investment, they also did it at a good price. So it's a win-win sort of situation, and the shareholders had an option of selecting whether they wanted to participate or not. So in terms of cash flow, no significant impact.
SJ should tell you that NMG is not the first company which has talked about this. I've shared this possible prospect with Centum Investments. We've had this conversation with Crown Paints. What do you think NMG's precedent means for this market?
What it means, and a number of companies have talked to us. They have come to see us to learn on how we went about this, and a number of companies had also tried to do a share buyback before, but they did not succeed. First, there was a lot of fear, and when we talked to various investors and various organizations and even some regulatory authorities, we were not encouraged a lot. In fact, we were told that if you achieve 5% success, if you achieve 4%, you'll be very lucky. So what it means is that the market has grown, the market is mature enough, the market realizes the value of a share buyback, and it is something which I would encourage investors to actually venture into. Because what it does, it sort of gives you an immediate uplift on the value of the share of the investment, and actually also leaves an opportunity for shareholders to decide whether to participate or not to participate, or to actually participate in the future. So it is something which I think we might get other people coming in, and time will tell on who will be interested in undertaking a buyback or not. But I think from the NMB experience and a success rate of 82%, I think it's not a bad thing. It's not a bad idea. It's a good idea. The market has actually told us.
When NMG launched the exercise at the end of June this year, one of the conversations I had with the exchange chief executive, he mentioned that companies like NMG which do this now have to be a lot more aggressive in terms of investor relations, because a lot of the valuations which are done out here, they are just knowledge gaps that affect the pricing of the various counters. What next for NMG in terms of going forward, engaging investors? What should we anticipate?
I think you are right, because one of the problems that I mentioned earlier is market perception. The value of NMG was significantly underpriced because the market did not have adequate knowledge on our strategy, didn't have knowledge on what was happening within the industry. So as a company, we'll be very aggressive in terms of investor relations. We'll engage our investors one-on-one. We'll have investor forums where we can share our strategy. We can share some of our plans, and that will keep the investor well informed. And I'm sure with that information, the value of the company would remain reasonably at the right level. So we hope that will continue, and will provide and the information on what we are doing on various platforms, on our platforms on print, broadcasting and digital, and those interactions with various investors.
We've had the buyback, there are now treasury shares. There's been talk about M&A activity. There's been talk about aggressively pivoting into the digital platforms. What next for NMG?
Well, we've embarked on a digital transformation journey starting from last year with the launch of our flagship brand on Nation.Africa, which is a digital brand. I think we will continue with this journey. We recently recruited and engaged Chief Technology and Innovation Officer, assigned that we are focusing a lot on technology and innovation. That means we will continue giving our consumers new products that fit with the changing consumer needs. And I believe that if we can sustain the consumer offering that is relevant, that is suitable for the consumer in a way that they need it, that will really keep us going. The other thing we'll do is we will invest in relevant technology, very, very crucial. And underlying all this is getting the right talent, getting the right people, and enabling our employees with the skills that are necessary to be able to deliver the products to today's consumer, who is significantly changing every day.